that oil is under pressure as investors struggle to gauge the demand versus supply concerns for the short term. We have Scott Bauer, Prosper Trading Academy CEO, joining us from the CBOE trading floor. And Scott, when you take a look, trying to evaluate the economic concerns, or the demand concerns, I should say, when it comes to the latest between the U.S. and China and trade, and then weigh that against what's going on geopolitically when it comes to Iran, how do you see this playing out in the price of oil?
I mean, we're going to see some volatility for certain in the next few weeks or so. And like you said, I mean, we've got the supply-demand, issue. We also have the geopolitical concerns really, and they're tugging at each other. So last week we saw the big spike up because of what we saw in the Middle East with the attacks on the tankers. Yet when kind of level heads kind of prevailed here and went back to more of the fundamentals of what's going on with demand and especially the oversupply, that's why we saw oil back down to where it is right now. That being said, the geopolitical concerns are not going away. And I don't think it's really any coincidence here that the one OPEC nation, Iran, who's really holding out on giving a definitive time when to meet, whether that meeting next week is going to be pushed off or not, I don't think there's any coincidence whatsoever that now there's more rhetoric coming out with their processing uranium and some of the other things that we're seeing.
Scott, last week we had OPEC lowering its forecast for demand growth. Do you think that we could see this reduced even further?
Absolutely. Friday we also saw EIA come out and lower their demand growth as well. We're seeing the U.S. produce more and more. Stockpiles are at the greatest they've ever been. So yes, I think in the future, probably 3, 6, even 9 months going into 2020, I do believe that growth is going to be lowered.
Scott, when you take a look at your expectations for the price of oil today, it's trading at $51.95. Do you think over the short term, say for the rest of the summer, we'll be trading around lower, around $45 or higher, and we could see levels reach maybe $60 a barrel?
Well, I think you have to put a caveat on that. Without any sort of unfortunate event coming out of the Middle East or big geopolitical event, I think that we have a cap at around 55. If, God forbid, there's some sort of event, we may see a spike up. But all the fundamentals, all the growth concerns, this, that, and the other are weighing extremely heavily, and I would not be surprised to see oil trade below 50 in the coming weeks.
Scott, switching gears here a little bit and talking about gold, we're seeing a little bit of a pullback today with gold prices off almost 0.2%. Do you think that this is just because we saw excessive bullishness in the markets last week when it comes to gold, or is there something else at play?
No, I think that's absolutely right. And I have been saying for the last 3 or 4 weeks that this big spike up in gold we saw to about $13.50 is well overdone. Almost like what we saw last week with oil based on the news coming out of Middle East, where it's just a pretty big overreaction in the marketplace. So I think it was overdone. Gold traded up, when the dollar was trading down. We're starting to see the dollar stabilize a little bit. So no, this does not surprise me at all to see gold trading back down a little bit.
All right, Scott Bauer, thanks so much.